Hey everybody, Dr. Tom Carr here, aka Dr. Stocks of drstocks.com, drstoxx.com. Hey, I want to apologize. It has been probably a year since I recorded a video for our YouTube channel, for our subscribers, for those on our free mailing list. And I am now getting back into the routine of pumping out these videos two or three times a week. So you can look forward to more videos to come from here. But I have been so busy with our new project. We launched a sister site. After 15 years of running drstocks.com, we launched a new site, drstockstrading.com, with two new newsletter services and a whole set of trading resources on that site, Dr. Stocks Trading, drstoxx trading.com. And we've got our two most profitable, best performing newsletters being sold on that site. You might want to give it a look over. And if you're not on our mailing list over there, please sign up for that. You'll get another free weekly pick, just as you do over on the drstocks.com primary site. We also have our third site, ixthusletter.com, IXTHYS letter.com, for long-term investors. Comes out once a month, gives you some long-term picks. We hold those at least a year. But more on those services later. I just wanted to kind of explain why I haven't been producing very many videos lately. It's because we've been very tied up with this new site, Dr. Stocks Trading. We're off to a great start. We launched back in June of 2017, and one of our letters is already up over 90% from that point, and the other letter is up about 30%. It's lagging its historical average, but you know how these things go. And in any case, more on that at a later date. I wanted to show you today how to build a watch list of the best stocks for trading. This is your first step in a four-step process for finding the best stocks to trade, short-term trades. I'm over on the FinViz site, finviz.com, a very great resource that I highly recommend. It's free. You can pay for real-time data if you wish. We'll get rid of all the ads, but a free service works just fine. Gives you access to all of their screening tools, their watch list tools. And I'm going to build for you a very simple screen that I use to find market leaders. Now, what we're looking for here are the stocks that are ahead of the rest in terms of their industry, ahead of the rest in terms of growth, that still have room to grow because their valuations are low and are showing good, reasonable relative strength. So how do you find those stocks? Well, I'm going to build a very simple scan for you, and that's the first step of as I said, a four-step process that we use to find the kinds of stocks that we trade in our various stock pick letters, especially the trend trade letter and our Ichthus letter. Trend Trade Letter, by the way, was our primary letter. We launched that back in October of 2002. It's been going strong every market day since then. We're having our second best year of the 15 years we've been publishing it. This year is the second best on record, and we're just doing great in this market. Of course, it's been a nice market to trade, as most of you know. All right, so we're going to begin by highlighting three filters here. We have a price set at over $10 per share. We don't want to trade low price stocks with this particular scan because we're looking here for market leaders, and you'll have to pay a premium to buy shares of a market leader. So we're looking for stocks priced over 10. I would even go over 20. But just to show you that we can get quite a healthy list of stocks, we'll start with $10 per share as a minimum share price. And some of the stocks on our scan will, be priced up over $100 per share, $200, $300 per share, and so on. We're going to set an average daily volume of 500,000 shares per day on average. We don't want thinly traded stocks. We want these to be market leaders. We want these to be stocks that are followed by the markets, by analysts, by the hedge funds, by the mutual funds. These are the must-own stocks. We want to be in them, but as we'll learn in later steps 3 and 4, finding the right time to enter the trade, that's one of the big keys to being successful. I've also set our beta at 1. So if a stock has a beta of 1.0, then it is just as volatile as the S&P 500. A stock with a beta of 2.0 is twice as volatile as the S&P 500. And we want stocks to be more volatile than the S&P 500. In other words, if the S&P 500 goes up 1%, we would expect our stocks to go up 2% if it has a beta of 2. We want those kinds of stocks. We want stocks that leverage the movement of the overall market. So we're going to set our beta for a minimum of 1, and that whittles down our list of around 8,000 stocks or so down to 700 stocks. That's a good place to start. Now let's add in a few other filters. First filter I'm going to put on is a price to sales ratio. I'll talk about this in later videos, but the price to sales ratio is your power ratio in terms of valuation. You get the best bang for the buck in market movement over the short term with a low price to sales ratio of all the valuation metrics: price to earnings, price to cash flow, price to book. Price to sales is your, there's the strongest correlation between low price to sales and solid market returns over the short term. So we're going to set this. We could, I like price to sales ratios under $1, under 1 particularly, which is $1 of sales for every share of stock that's available. We're going to set this, however, for under 2 because we want a fairly sizable list of stocks. So with a price to sales ratio under 2, our number of stocks now is down under 300. We also want growth. Most important growth metric is going to be the EPS growth this year. So we're going to set this at a high peg of about 25%. That's about as high as we can get it, I think. Well, you can go over 30, but we're going to go with a high EPS growth this year of 25%. That means that this year compared to last year, the company is producing earnings 25% higher than they were produced last year. That's a good thing. Now, there are all sorts of ways companies can increase their earnings without necessarily increasing the value of the company by reducing a tax burden, for example, or buying back shares of its own stock to reduce the number of outstanding shares and therefore increasing earnings per share. But we're going to set that peg as a high one because those are the kinds of things that you can't get 25% growth out of. You only get 25% growth from a genuine expansion phase of the company itself. The next thing we're going to do is we're going to set our sales growth quarter over quarter to positive. Sales growth is something that you really can't fudge. If you're growing sales, that means you've got new products out in the market, you've got an increase in a footprint of the company, you've got an increase in market share, you've got all kinds of good things going on if you're growing sales. And we want especially the most recent quarter over the previous quarter to show that increase. So that's going to give us a real good boost in the near term for this stock. The next thing we want to do is to make sure that our stock is showing good relative strength. We don't want a stock that's trading down near the 52-week lows. We don't want a stock that has had a horrible quarter or a horrible month on a performance basis. We want our stocks to show good, strong trending action in an upward direction. And so one of the ways you can do that, there are various ways you can do that, but one of the ways I like to do that is to set our RSI 14 indicator at not oversold that is greater than 50. So a stock showing an RSI greater than 50 is in the top 50% of all stocks in terms of price performance. And get rid of this ad. That gets us down to 68 stocks. Now that's pretty good. I'm going to add a couple of more little things in here that will help us out. And one of the things I like to add is institutional ownership over 30%. That gets us pretty close to a filter that was made famous by the Can Slim trading strategy from William O'Neill, the author of How to Make Money in Stocks and the founder of Investors Business Daily and other things. he likes to see strong institutional ownership in any company because that suggests that you've got insiders in the company owning a strong percentage of shares, but you've got, more importantly, large funds owning the company. You've got big investment banks owning the company. And when you have those big players owning a company, owning a healthy percentage of the company, they're not going to let that company have a horrible year. They're going to be putting some pressure on management to benefit the shareholders because they happen to be a shareholder. So it's a good thing to see strong institutional ownership. That gets us down to 48. I'm going to add one more filter, and that is institutional transactions over here. I'm going to set this as positive. What that means is that in the most recent quarter, hedge funds, mutual funds, investment banks are net buyers of shares of that company. And when you see professional money like that going into a company, you know that it's a pretty good bet going forward. Okay, so we're now down to 30 stocks. That makes a pretty good watch list. I'm going to save this as a portfolio, very simply done. And I'm going to name my portfolio. Let's just call this, I'm going to click this OK here, which gives us how many shares at current market price we would have bought if we were trading a $100,000 portfolio. And I'm going to name this basic trading stocks, okay, to keep it separate from all my other portfolios that I have in here. And we'll save it. And there we are. Now, market's not open just yet, so we don't know what our stocks will be doing today, but we can see yesterday's market, this handful of stocks was up about 1/3 of a percentage point, which was pretty good because the market was choppy yesterday. The Dow actually lost some ground. So we know we're in a good set of stocks here. And we've got some pretty well-known names on our list. Best Buy, of course, is well-known. Devon Energy, Freeport McMoRan, a big copper company. FedEx, Gray Television, Huntsman, JD.com, a Chinese internet company. McKesson, Nucor, Sealed Air, Steel Dynamics, Viacom. So you've got some really some major market players in here. You've got some names that are up and coming market players. This is just a great list to start from. Now, you can't just buy these stocks from this particular list. We're going to have to drill down into this list of companies to find the best trading vehicles, and that is a set of strategies that we'll be talking about over the next few videos. I'm going to cut it off here at this point, guys. We'd love to see you get on our free mailing list at either drstocks.com, drstoxx.com, or drstockstrading.com, so that we can get out some free picks to you. We send those out each week. You get a free stock pick along with some other stuff. And I'll certainly alert you of any new videos as they are produced through that mailing list. God bless everybody. We will see you on the trading floor. Bye for now.